Alrighty, good morning, ladies and gents. We'll get going here in a minute. Crap, I gotta change the name on it. Let's see, we'll call it FOREX Basics, I guess. Good lord, I'm cold. Okay, so let's see. Today we're going to be covering FOREX Basics. One of the things that was brought up is we might have some new people that get into the FOREX course and actually have no clue about FOREX, i.e. they've never traded it, don't know what the hell they're doing. As simple as that, I guess. So we're going to cover basics in reference to the TAPFXS system. That way you can kind of understand what's going on. And it's really not that difficult. It's just some basic knowledge things that people kind of don't know about. We're going to cover spread. Slippage isn't really a matter with this today. If you have, TJ, since you're live, if you have any questions, feel free. You can type them in Skype or you can type them down here. So basically, Forex, how does it differ from binary options? Well, binary options is time-based. So we see this little candle timer. If I hit buy right here and I took a 5-minute expiry, 5 minutes from now the trade is over, done with. Whether you were right or wrong, it's done with. If 5 minutes later it does what you want, too freaking bad, you're out of the trade. So it's kind of a, it's definitely highly time-based. Now the other thing is the differences in Forex and binary options is it doesn't matter, and we'll get into this a little bit with take profit and stop loss. I'm going to zoom in here a little bit. In Forex, it doesn't matter in take profit or stop loss, or take profit and stop loss. If the candle moves up 100 pips and then drops 50 pips and you took a sell, you win. Now with Forex, if the candle moves up 100 pips, then drops 200 pips, you'll most likely lose, even though you got the direction right, because you're going to hit what's called a stop loss. Now, what a stop loss is when you trade binary, before you trade, you say I'm willing to bet $10, and if I lose, we'll do this on a 70% basis. If you lose, you already know you're going to lose $10. Now, if you win, you know you're going to get $7. So the risk reward ratio is a little bit above, whatever, 70%. But the risk reward ratio isn't as clear. Now with Forex, you can control how much you win and lose per trade, and it's called a take profit and a stop loss. The take profit is how much you're going to win. The stop loss is how much you're willing to lose. The take profit and stop loss is based off of a percent of your account. So, for instance, I'm right now risking 2% of my account based off of 10 pips. So this is 10 pips stop loss, 2% risk. Tells me I want to trade at 0.39 up here. That's the trade size that I would use. Now, so what does that break down to in actual numbers here? This is a demo account, so we can go ahead and do this. Now, before we get into that, we're going to talk about one other thing, and it's called the spread. Up here is spread, 1.2 pips. So what we can see is, you see how there's a green and red, this thing's going up and down depending on what price is doing, and then above it is another line. What that means is if I hit buy, I don't actually get in here, which means if I got in, my trade would start off at $0.0. Oh, wait, TJ, I sent a thing in there, commission on trades. Remind me to go over that with you. Okay, so if I hit buy right here, I automatically start in the negative 1.2 pips. So every trade you take in the Forex world automatically starts in the negative. So if I take a buy, I need price to move up 1.2 pips to hit break even. Okay, there is also something called a commission. Now, I'm on an account that does not use a commission. Everyone on here who is FXCM should be using the FXCM micro account. Now, just because it says micro, don't be fooled by that. A micro account works up till $10,000. Now, some of you are using Pepperstone, where you get a lower spread, but you're going to pay 75 cents per trade. That's very important when deciding on a broker to pick out. I prefer, if you have a smaller account, it would definitely behoove you to use something that has a no commission and just spread. If they do have a commission, you definitely need to find out what it is. And if it's something like $2-3 a trade for smaller accounts, that's ridiculous. You don't want to use something like that. So let's see if we can, let's zoom in on this one too. I'm going to make this real big if I can. Now we have a setup here, so we're going to go ahead and take a sale. This isn't a great setup, and we're 15 minutes from the bell, so this is not something I'd normally take. So you see, I took a sell. So immediately, cool, Mel, I'll check it out. Yeah, I saw it. I don't know if I downloaded it. I was in a hurry that day. Okay, so as we can see, when I opened this trade, I was automatically negative about 1.3 pips. It's now moved into profit. But here is, down here, this is our take profit, and this is our stop loss. So if price drops to here, the trade's automatically closed. If price moves up to here, the trade is automatically closed. You never, 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 and I'll say never like 10 more times if I could, take a trade without a take profit and stop loss. What happens is, let's say right here, and I forgot there was news coming out right at 8:15. So I hit sell, good news comes out, and it shoots up. Now, I'm going to have to struggle as I go into the hole to come down here and hit X or right-click on this and close the trade. See, now, let's say I'm trying to close the trade. I'm right-clicking. That isn't working. So I come down here and hit X. Price can move. Let's say, by instance, you miss a news trade. Price can actually move literally 50, 60 pips in a matter of seconds. So we always want this in here. For instance, last week or was the week before, I got into a UJ trade. By the time I took a sip of coffee and sat it down, it had already dropped 10 pips and closed out the trade and took a loss on it. If I did not have a stop loss in there, it would have been even worse. I mean, it probably would have been I think it dropped 27 pips in about 4 seconds. So it's important to have a take profit and stop loss in. Now remember, the take profit and stop loss, all you have to do is sit down, do a little bit of math, and you'll see what your loss is. For instance, I'm negative 4.8 pips on 2% of my account, which is 1,945. So let's say a $2,000 account, I'm negative $10 on negative 4 pips. So you'll be able to figure it. You can sit down with a calculator and figure it out. I also have, you can go to the FOREX calculator, but honestly, it's easier just to figure out the numbers by watching a trade or two on demo as you're learning. So the most important thing, again, I said here, is take profit and stop loss has to be in for every trade. Now, let's zoom out one. I'm trying to think anyone have ideas what else I need to cover on FOREX Basics? Up here, since if you're new, this is where you enter your trade size. You do have a little indicator that I give, which it is picky when it wants to show up. When I change chart sizes, but here, let's get into it. Let me go to indicator list. It's called lot size calc. It's nothing fancy. A pip is worth, it really depends on your trade size what a pip is worth. So right now, 3 pips is worth about, so we're $1.18. 3 pips is, give me a sec. I'm trying to answer TJ's questions. So right now, 3 pips is worth about $8 on a 2% of a $2,000 account. So right now, I have my stop loss set at 10 and my risk percentage at 2%. Now, the pip amount varies depending on the number that's in here. For instance, I'll drop down and we'll do a real tiny trade on Euro so you can see. So if you're trading bare minimum sizes, 0. This is the smallest you can trade, 0.01. And I'm going to take a buy. Now we can see immediately, and this is Euro USD. So negative 15, negative 2 pip. Crap. Let me close the UJ trade. Okay. So negative 2 pips comes out. It's about 10 cents per pip minimum here. So if you put this up to 0.1, basically that would be about $1 a pip. So if you're trading 0.1 lots, that's about $1 a pip. And then if it was 0.3 lots, it's about $3 a pip. Now, this is going to vary from currency pair to currency pair because of how much it's worth. But for the most part, you can round it off like that. Basically, all you do is if it says 0. 0.1, add a 0 to the end of this, and you get 10 cents. So you just move this decimal place over 1, we get 10 cents. If we put it 0.1, and then you move the decimal place over, it's 1.00, so it's $1. And then from there, you can kind of extrapolate up on it. So 0.3 is about $3 a pip. 0.5 is about $5 a pip. So at 0.5, if you take 5 pips, it's about $25 to $30. If you take 10, it's about $50. It's going to be a little bit less because remember the spread comes in and cuts a little bit out of it. If you have commission, then it's going to be even less. That's why I say on these smaller accounts, you definitely want to have, if possible, a very low commission or just spread alone. Because what happens is the brokers, by their spread, they take their commission out of that spread. So if you open a trade, then close it immediately, they make, let's say, when I opened it, I was $1.80 in the hole. They'd make $1.80 on the trade. Until it comes into profit, that $1.80 is theirs no matter what happens. Because if it goes negative more, you lose it out of your account, they get their $1.80. If it goes above that, remember, you're not in profit till it's above the spread, so that's their money either way. That's how the Forex brokers make their living. Because remember, some people will trade 5 lots, and so that opening for them at like 5 lots, that would be like $50 they made off of one trade. So that's how they make their money compared to the binary options market. Now, another thing compared to the binary options market is you are in the actual market, or you want to call it exchange. I took a buy here. In order for this buy to happen, there had to be somebody selling at that price. So there is actually a real human on the other side of every trade. The broker has no... the broker could give two shits whether you win or lose, because anytime you do a buy, then there's somebody selling, and you're taking their offer. If you take a sell, then somebody is buying. So if you hit sell, somebody's buying what you just sold. I know that sounds a little convoluted because you didn't own actually thing to sell, but you're saying price is going to go lower and someone's saying price is going to go higher, and those two equal out, and they'll get the amount you want. I mean, it's just basically there is somebody on the other side of the trade. So that means the broker has no, the most legitimate Forex brokers have no interest in forcing you to lose. Like with some binary option brokers, it's you against them, which means some shady brokers will fudge and manipulate price to try and screw you. By the way, this was not a good trade. We are hitting this line right here, and we are seeing the bounce down. Okay, so a Forex broker, a good, legitimate, licensed Forex broker has no... I can't think of the right word. He has no reason to screw you over. So that is a huge difference, and that's why there are still some shitty brokers out there, Forex brokers. But if you stay with a fully licensed one, like the UK, Australia, the United States, Netherlands, they have fully licensed binary or Forex brokers. FXCM is kind of like a worldwide one that they're licensed just about everywhere, so you can get in with them. The only thing that will vary is the size of the account they want from you for where you're at. If you're the one that you're on, TJ, the only thing I'd be concerned about is, and you'd want to ask them, is there a commission per trade or is it just straddle based? And if there is a commission per trade, you'd want to know what it is before you jump into Forex. That's for a smaller accounts. That's one of the biggest things that can burn a hole in the pocket of your account is a commission on each trade. I'm trying to think what else we need to go over for beginning in Forex. So we covered it's time-based. As we can see, this was the candle. It's still running. As long as it doesn't hit this line, this trade will stay open forever. Now, there is something, when the U.S. session closes and it goes into the Asia session, this is why I don't recommend trading across that session. You'll get God, I can't freaking talk. You'll get something called a swap. They will charge you to keep the trade open, basically, because one market closed and another one opens. So I highly recommend, if you're trading this, one, if you can trade London for trends, London has the best trends. U.S. has them sometimes, but occasionally they're flat, and U.S. is more prone to breakouts than it is to constant trending. We'll see more trend breakouts, if you want to call it that, than you will see a nice constant trend. Let's take a look at how what I mean by that really. So here was London. See, nice trend up all the way. We had one trade opportunity to we had two trade opportunities on euro with a possible loss there depending on what you did. Although that candle when it broke out moved 6.7 pips. And then let's look at this is USD JPY. Here's our upwards trend. So here's a trade, here's a trade, and here's a trade. So that would have been three winners. So right there we had six trades, five winners, one loss. Coming down, we had one trade, and then nothing. This is the one that I missed when I was taking my daughter to school, which was our second. Now we're in the U.S. session, so I'm going to be a little bit careful. The U.S. bell rings in 5 minutes, so I don't trade during on that. But if you can trade London, you wait to about an hour, half an hour to an hour after the open, because normally you're going to have a breakout. Yes, you can trade the breakout, but demo it only. I mean, don't go crazy overboard on it. Once you get the hang of it, it is very profitable. London breakout is one of the most common strategies you see out there. But other than that, I mean, hopefully I covered some of the basics that people wanted to see on Forex and the difference between binary options and Forex. Personally, I would say Forex is more sustainable. This was something I was talking about with someone this weekend and this morning. With that guy killing himself over in Canada, we've already seen several in the past 6 months. Several Forex brokers have already started to drop their binary options products. They were offering because I guess, well, I mean, a lot of us thought binary options last year was the year that it was going to catch on and become more legitimized. Instead, what we've seen is more bucket shops being more aggressive, and basically it's a stigma. Some of these Forex markets are offering binary options, and they've seen a loss of customers because even a regulated Forex broker that's offering binary options, they're kind of looked down upon as being a shady institution. So and don't quote me on it, but I think this year you're going to see a lot of more Forex brokers dropping the product. And it's just a matter of overall it kind of gives them a bad first impression because they see Forex, yeah, great, but then they say, oh, they offer binary options. And that scares a lot of people off. But so basically, let's review real quick. Take profit and stop loss is a must. That is how we control our trade compared to binary options where you enter the money amount first. Sorry, my nose is drippy. I'm trying to wet this run so you can see what happens when it hits a stop loss, that it does just automatically close. But I really do think you might want to be careful about binary options for now. Markets world, they're safe for U.S. traders, but the thing I have is what happened is after that guy killed himself in Canada, he lost, what was it, like 200,000? What are they, loonies? That's their currency name, the nickname for it. But he lost about $200,000 Canadian in Canadian. That's almost 300,000 U.S. Then all of a sudden you saw an emergency meeting between Interpol, the FBI, and I forgot there was a couple other organizations. And that's why I think it may be time for a lot of people, if you're in the United States, to maybe focus on Forex. Even if you're not in the United States, places like the UK, London, whatever y'all call it, the Netherlands, I think you're going to be seeing a big pullback from legitimate places that would actually be okay to trade binary options with, pulling out of the market because, I mean, when Interpol gets involved, and that's not even really their field. Oh, the CFTC, Interpol, the FBI, and what's the UK regulator's name for Forex? They all got involved after this guy killed himself. So I think, and this was just last week, I believe, it was an emergency meeting, so I think you're going to see some things coming out of it that aren't exactly wonderful for binary options traders. And if the U.S. does like they did with gambling, they didn't just say you can't do it. They freaking IP banned. They blocked as much as they could. They made it straight up illegal for U.S. traders to do it, or U.S. gamblers to do it. And the loophole that we have right now is U.S. traders can approach any broker that will accept us. But the thing is if they, and this is the hallmark of binary options. If they solicit you, that then puts them in a gray area where they're not supposed to be talking to you anymore. For instance, Market World does zero solicitation. All they do is let you sign up for the account. They never contact you. The only time you get contact from them is they'll on occasion give you a bonus to your account for free, but their bonus structure isn't that it kills your rollover. It's you have to trade so much to get that bonus, but you can still withdraw at any time. But they do not solicit, so they're still relatively safe for US. But I think you might see a change in the law that says you can't trade binary options unless it's Nadex or Cantor Exchange, because those are the only two proved. And basically, they'll give you a list and say, here's who you can trade from, which boils down to Nadex and Cantor Exchange. In a somewhat form, it might happen over in the UK where they just say you can use IG, because IG is the one that is Nadex's father company. And those are hybrid binary options that are evil, evil, evil. I've been on and off trying them for the past, I would say, 3 years. I've never been able to become profitable with them, just for the fact that the risk-reward ratio flips so fast on those that it makes it damn near impossible. Where with Forex, you can lock in your risk-reward ratio, and with binary options, you could lock in your risk-reward ratio because you knew what the payout was going to be before you got in the trade. Now, with Nadex and Cantor, I'm not saying you don't know what the payout is, but by the way they let you into the trade, there might be a good payout available, but it's already bought out by the time you see it. Or it's just impossible. The targets they give you on good payouts are impossible to hit. So hopefully that covers everything we needed to know about getting into Forex. It is, as long as you use a take profit and stop loss, do a conservative 2 to 2.5% of your account. If you're a U.S. trader, you're not going to get above 2%. Frank Dodd laws lock us in so that we can only trade about 2% of our account. European guys, you can do 2.5%, but 2% is a really good place to start. It's not a get-rich-quick scheme. Let's see, starting with 500 realistic income. Here, let me do this then. Let me close some things and so okay, so give me 1 second to look at something real quick. Okay, so 2% of your account is about $100. Now, doing extremely safe, that means you would start off at trade sizes of about 0.15, and let's drop it down to about 0.15. Okay, and we have a huge support here, but just to see if it'll go bust through, we're going to open up a trade. So at 0.15, when I open up a trade, negative 2 pips, 2.6. You can see the money values down here, but negative 3 pips is about negative 4. So we'll let this one run completely through, and then we'll see about what that's worth. You would be London. You should be able to pull out 3 to 5 trades. So we'll see what happens here. This again, not a good trade. It is red. It is yen is stronger, but we're hitting a big time support over here, so not the best. We did want to wait for this candle to close first to see where it goes, but I'm jumping in just for, again, this is just for show on the pip size. If it hits 0.5, we'll see, because that will double it and give us the number about what it would be for a win. So I need either 0.5 in profit or 0.5 in loss. Negative 4.5 or 5 in. So 4.5 to. Now remember, as you go, you change this number so you're compounding up and down, so it does grow faster. Let's see. I'm still waiting for it to hit. It's dicking around. We just had the U.S. Open, so it's 8:33. So this was definitely not a time to be trading, because we often will see a change of sentiment during this period of time. And give me a second. I'm going to try and do something real quick if it hits. But this is about what we're looking at on a $500 account, give or take, if this little bastard would decide to move a direction. That's my car alarm going off. I'm gonna go check in just a second. Actually, I'm gonna mute and go check real quick. I think my car alarm might be going off, and the button I just hit didn't turn it off. I just want to make sure it's not mine. Okay, so I'll be right back. If you watch down at the bottom right, you can see this is based off of a 0.15, which is about what you'd use on a $500 account. I'll be right back. Okay, I'm back. Sorry. Yeah, freaking newspaper guy looks like he bounced a newspaper off my car. Okay, so what we're doing is see if this will close itself out. 7.5 pips is about $10. So if I had to guess, you're gonna make about $15 a trade at 1.5. So a successful trade will be 15. If you can land 3 a day, that's 45. Let's do 5 a day on the London session with 1 loss. It's about $100, give or take, because I'd count in 1 loss, because sometimes these setups don't work. Like this one, for instance, is a setup. It did close below, but because it's during the US bell, we would not have taken it, and we had a support over here, in which you can see it's a verified support, and it had 1 retest on it. So the indicator does tell you what's going on. Like this is untested resistance. It means that price has not tested it once, but we can see the daily open is here, so no. And then if we did get in on a close above it, our target would be here, because this has been tested 3 times, so we know it's probably going to hold, or it might break through, but it's going to hit it, drop, and then break through. So we'll see if this little puppy closes its butt out. Now this might be a pullback and then it drops down. I don't know yet. Again, this is during the US bell, plus we have a good support below it. It touched the support, as we can see, and closed slightly above it. So we would have wanted to close into it. That would have been much better. If we look over here to the left, we can see our entry target would have been more about somewhere right here, this blue line. And I'll zoom in. And we'll see if it drops 10 pips. And that way you'll get a definitive. Again, though, I would check to see if you pay a commission. If you pay a commission, this is going to be slightly different. All I'm paying is the spread, so I lose 1.2 to 1.6 pips immediately on each trade. And this one's not too bad of a setup. The USD is opening, and I'm guessing USD is going to push it down. We do have a lot of Asia holidays today, so they might have a little bit more control. I think it's just China today, but we have a lot of Asian holidays this week. But after this closes and we get an answer, then we'll see. But 4.8, let's see if it hits 5, then, because then we can just double it. Right now it's at about $6. That's what I'm saying. I think it's about $15 a trade. Rounding it off, it's about $15 a trade at 0.15. Hopefully that answers your question. Because this one could screw around forever because it's at a resist. What's the euro doing? Now, the other thing we do have now is UJ is somewhat moving down and it's somewhat moving up, but we can see there is a resist here and a support here. So they kind of have the same situation going on, that we have a resist here and a support here. So it depends on, if the euro spikes up, then the UJ should spike down. But right now they're both piddling around right at this mark because we need a break somewhere. So we'll see how this goes. But 5.6 pips is $7. So yeah, that's about $14, $15 a trade at 0.15 lots. And on the London, you should be able to, between Euro and USD, possibly pull out 3 to 5 trades a day. One of the things I would look at, though, is GBP USD once Brexit's over. Then I'll be trading Euro USD, USD JPY, and GBP USD. I do trade USD CHF, but I'm not doing it for the signals. USD CHF is a very nice mover. It tends to move nicely, and it also, not rapidly, but fast enough you don't fall asleep staring at the damn charts, because Euro tends to sometimes just drag on and move slow as shit. It'll still have the same opposite direction as UJ, but it tends to just drag on and never end. So some trades just go blah. Do we have any questions on spread, how you can control the amount? The indicator tells you what to do. Do we have any questions on that? Why take profit and stop loss is so important? You have to have it in there for every single trade. Right now I'm running a 1-to-1 risk-reward ratio, but I typically, what'll happen is I pull my stop loss in. This is a hard stop loss. It's there for safety reasons. I actually will close trades before it hits it, typically if it closes above the fast-moving average, and then we take a look at it. Because as we could see, this would have been an entry, but it never closed above, even though it did spike up above it. And we can see it's struggling getting through the support. Again, and it's struggling getting through the resist. We are borderline having an entry here. It's green. Euro's coming stronger. Personally, for me, I would be waiting about 10 more minutes before I jump into a trade, but okay, anything you, let's see, TJ was here for some questions. Do I send what automatically? Sorry. Oh, do I set them automatically? I'm sorry, I didn't even cover that. The way take profit and stop loss is controlled is right here. This is your EA that runs, and anytime you hit buy or sell, they're automatically set. So I have a take profit of 10 and a stop loss. That's backwards. God, what am I doing? And there. Now, anytime I take a trade, they're automatically set for me. So depending, let's say this closed above it, we'll say that it's an okay trade to get into. I'm going to do 0.1 so you can see that. Okay, 26 seconds. Remember, we wait for the close of the candle because if it closes below this, it's not a good trade. Either way, I'm going to take it. But let's do it by the book on this one. Everything, we have green, green, Euro's pulling up above the USD. Euro's first, so that means the Euro's stronger. And we can go ahead and get in. There's 12 seconds left. Now notice we started 1 point something in the negative. This might be a good example of why not to jump the gun. 3 seconds left, and it closes slightly above. So that's an okay entry. Fast was above slow. We have a little bit of a resist here, but if it clears, we're good up going up. Now what we want to look at, and this is why I try and zoom out, if we look to the left, there's really nothing in the way of it going up. But yes, stop loss and take profit are automatically put in for you. The EA does that for you. That way you don't ever screw up and not have it in there. Now again, this one, this is not in my trading time, and it may or may not go up. Let's zoom out quite a bit and see what we can see. So far we don't have anything there. We do have a resist here and here, so I did get in right on a resist, which that's not great. Let me do something real quick. So I did get in right on a resist. Now if I would have looked back, I would have saw that, because remember, we always want to look to the left. And I could actually draw that line. Watch, I'll draw where that resist is, and it comes out right on my buy. So we can see why it's going to struggle to get through there. We had 2 resists back there. So I got in, and notice, let me zoom in a bit. Notice I got in on the close, but price, see how the buy is above where price hasn't even touched? That is because of the spread. So I got in right on the tip of this candle, and if we measure it up, it's 1.6. So I got in with a 1.6 pip spread. So that's what spread does to your trades. Now, if this thing holds and moves up, that'd be awesome. But again, this is not one I typically would have gone into. I would have waited till it closed this blue line, and then we can jump in. And then after that, what's our first target would be here. We got about 8 pips up to there. But first we needed to move up and break through. And let's see, from there to there, it's 8.5 pips up. So if it closes up, then we got about an 8.5 pip run on our hands, maybe 10, but I don't know. This isn't really a strong one. It's just here's the A, B, C, and the downward move, or 1. Actually, it's 1, 2, 3, down to here. So that's our move. But setup-wise, again, this was kind of a weak one. We're just coming out of a big downtrend, moving into an upwards. We do have fast over slow. We're green. We're green. We do have, this is the euro, which is blue. Euro's the first, so that means if euro's on top, it's stronger than the USD. This was our setup here. Entry was after this candle, so we would have entered here for the drop down. So that one would have worked out nicely. And the good thing about that is we were coming off a downtrend, and this one then it just finally plummeted. So this was a very nice setup. You're correct. Sorry, someone else asked questions. But this is our entry candle. This was our qualifier. That was our entry. And we could see it did go red, and it was red. The only worry you had was this was kind of close, but you could have waited for this one. Still got in on a nice drop because there was not anything to the left until right here. So it had room to drop. If we remember when we looked left, this trade did have plenty of room to drop without hitting a support. That support's now become a resist, which it's struggling to move its little ass through. Again, we're going to be looking for the same setup over and over and over and over. That's all we're doing, is the exact same setup over and over. Like I said, the first time I did this, I think I gave y'all too many possibilities for setups. It was confusing to people, and now that it's been simplified, like DJ did fucking awesome last week. He mimicked one of the trades I took. He was in it with, I think he got in 20 seconds before I did. So you can't have more than one trade open at a time, but on a smaller account, that will affect your liquidity. So if you're running 2% on a $500 account and you try and open a second trade, you may have to drop the trade size down a little bit. Or if you're planning on doing 2 trades, then I would say you might want to go, let's say you're at 0.15, you might want to go 0.6 on each, or 0.6 and 0.7 on them. Now, that's a good question too, because trading the euro and the USD JPY, I do not open two trades, because since they move inverse of each other or opposite of each other, what happens if I take a sell here and a buy here, then all of a sudden this one reverses and the UJ reverses? I'll take two losses. So ideally is what you'd want to do is trade possibly GBP USD or USD CHF. Honestly, anything with a spread below 2 pips, look at it, and that's something you could possibly trade. We don't want anything above 2 pips, because that's just shit then. You're kind of wasting your time on a 5-minute time frame, especially since our goal is about 10 pips. And if you have a 3 pip spread, that means your final target's going to be 7 pips. You'll get 10, but it tosses off your support and resist, because I'm trying to see how to explain this a little bit. Let's say my goal was 5 pips. That would put me right here. Now if I add in, let's say, a 3 pip spread, that moves my target up to here. That's why we don't want anything really over 2 pips. Now, I've given this out before, but let's say you're having issues visualizing your target, and I'm adding this in today to the pack because I completely forgot about it, was this. So let's say our take profit is 10 pips. We set it in 100, and I'm not going to show the stop loss. Okay, so there is our floating goal. So we can see that we entered here, and this is 10 pips up. So it gives you a floating goal. What also happens here, now if we're looking to the left, we can see what price is going to run into as it gets there. We can see here is a resist. It might stop it. It's already pushing through. It's pushing into this one. Then it's going to hit this one. Then it's going to hit this one. So we can see everything from price up to here, what's involved with it pushing up to our target goal. And that's in lines. I'll go ahead and throw it in there. I forgot to put it in there. And I'm going to do its own video, actually, a little bit later. A little bit later today. But I like inlines, this right here, and you can change the way it looks. If we go in, so if you don't like those dash lines, you can do whatever you want. You can do dots, and then you have dots. You can change the way it looks. Why did I choose 5 minute? Mainly because I can knock. Let's say I'm on a. Okay, let me ask this first. How many hours do you have to trade a day? And then we'll see if this fits into your question. The question was, why do I choose 5 minute over a higher time frame, say 1 hour or 4 hour? And then I'll flip through the time frames and show you. But how long do you have to trade per day? How long can you actually sit down and trade for? Three to 4 hours a day. Okay. So we already looked at the 5 minute time frames, and between UJ and Euro, we had about 6 trades in a 3 or 4 hour period. So let me close this, and let's remove inlines. I think you already know the answer, though. Now, one good thing is if you move up a time frame, your profit margins become a little bigger, but so do your loss. But how many setups do we see now? Here's that one setup we had. That setup we were looking at, it's not even there now. It's gone. But if we look back, we have one setup on Euro now. Now let's look at UJ and see how many setups we had on the 15-minute time frame. You could potentially, but you're going to go, like I trade 1 hour itchy, and there's some days I can go 3-4 days without a trade. Okay, so here's one setup and 2 setups. Possible. So we had 3 setups on the 15-minute instead of 6. So we had 3 setups instead of 6. If we jump up to the 1 hour, like you suggested, and let me do this. Let's put the days on there. Okay, so here's 25. I'm going to mark the days. This is 1 day. Two days. That's 3 days. So that's 4 days plotted out. So how many entries did we have? We have a possible one here, drop down, then two on that day, one on that day, and one on that day, and we have a possible trade right here setting up. So 1, 2, 3, 4 trades over 4 days. That's kind of why. Now, the other reason I say use it on a 5 minute, which you could actually take this to an extreme and use it on a 1 minute, is learning. You need to get repetition in. I'd say 1 to 300 trades, depending on how proficient you want to be with this. And we can see that little support I drew there is holding for even on the hourly. Okay, so repetition is one. On a 5 minute chart, you're going to get repetition in. If you want to up your repetition for learning purposes, we could always drop to a 1 minute chart. But then my target would be 2 to 5 pips profit. But repetition is really, really important when you're getting into it, because we want to be able to do the same exact trade over and over and over. Then let's say on the 5 minute you become proficient, but you don't want to be able to sit and stare. Then yes, you can move up to the 30 minute, the 1 hour, 4 hour to the extreme, and you are able to pull more pips. But you need to learn the system, become proficient at it first, and that's why I say 5 minute is a perfect middle ground, because the 1 minute will move too fast, in my opinion, for people. But the 5 minute is a nice middle ground of you get enough setups to practice, and it moves fast enough where you don't fall asleep. Whereas the 1 hour, like I said, that gets kind of brutal, because you would be sitting, and depending where these candles fall, you might be asleep, you might be awake, because you're only going to get 24 candles to deal with. So let's say this 1 hour candle, and you said you had to be at work. We've got 2 minutes 57 seconds to this candle ends, and it's right now, it's basically borderline. See these blue dots? I would want it to close below it. So let's say it closes right where it's at, and you got to go to work. And then the next candle takes another hour to form, but it closes below it, because we want to wait on the close of the candle. No matter it's 1 hour, 1 minute, we waiting on the close of the candle. So you're going to miss this trade. Even if it might drop to where we want it, you're going to miss the trade because it's a 1 hour candle. Plus, we don't want to leave trades open across sessions. Now, the London and US is one session, and if you take trades in the Asia session, they want to be closed in the Asia session. Otherwise, you get a swap, and that's money out of your pocket. Does that clear anything up on it? Why I prefer the 5 minute? The big part of the 5 minute is because you're what's called an intraday trader. Now, if you have a larger account, yeah, then you can start going for the overnights and things like that. But you're just a beginner, and this type of trading may appeal to you in the long term, where you trade on the 5 minute, because you know when you go to work, all your trades are closed. You don't have to be sitting at work wondering, Jesus Christ, what's going on with my trade? That gets kind of stressful for some people. Some people can just clear their mind and get it out of their head. Some people, they fucking can't take it. They literally need to be, and they'll be on their phone checking their trade every 30 minutes, and it really does wreak havoc on their life. So, in my opinion, I like the fact that when I'm done for the day, I'm done for the day. I don't have to worry about a trade that's running. I'm one of those people that I would be checking on a trade. If I couldn't see the charts, I'd probably be checking on the trade on my phone every 15 minutes just to see what it's doing. But that sums up everything for it. Yes, USD CAD is a viable one. I actually like USD CAD for Forex. Yeah, I know people who know me well would say, what the hell, you hate USD CAD. I hate USD CAD for trading. Is FX more stressful for me than binary options? No, not at all. Reason being, binary options is a one candle thing. The reasons binary options is more stressful for me is, let's say, I don't know, right here. This is a waterfall. So this would be a perfect. Let's just say this candle here. I'll zoom in one. So let's say this candle here. I was saying reversal, reversal, everything lined up. There was and ignore this is not because it was a breakout. But let's say this candle here, or even this candle. I'll describe both of them why they're both stressful for me. Let's say I took a buy here because I thought it was going to bounce up because I needed to bounce in one candle. So it didn't bounce in one candle and I lost. That aggravates me and pisses me off, even though there was good support, but it did break below, so it was a warning candle of a breakout. But let's just pretend this wasn't a warning candle. Now let's say, oh, here's daily open. There's super good support here. So I held off on that trade because I had a feeling for some reason. I get in here. Now I'm waiting on the close of a candle. So if I get in this trade and this candle does this, there's I would say a 50-50 chance that my broker hands my ass to me and says, you know what? It didn't close high enough for us to count that as a win. The binary options brokers will play stupid games with that. Now remember, because of spread, you see how the spread is bigger than this candle? They can 100% legitimately tell me this was a loss because my spread is bigger than that doji. So they could, because of spread, tell me I had a loss here because my spread was bigger. And because the spread's bigger, they can put price anywhere they want to in that spread and call it a win or a loss. I'm at the mercy of the binary options broker to say, you know what, that actually did move up a little bit, and we're going to ignore the fact that the spread's there. That's why it's bid plus ask divided by 2. So right there in the middle ground is where that would have closed. So if we zoom in on this, as a binary options broker, the close of this candle is actually there, dead in the middle, and that's almost the exact same. So unless you had a perfect entry, that's probably a loss. That's why binary options trading was a little bit more stressful for me. With Forex, I don't care about these little candles because let's say this was my qualifier right here. This was a little bit tight, so I waited till this candle. I had the option to wait a candle and see. And my sell would have been, because I waited an extra candle, my sell goes down to here. When price hit here, it drops straight through. So what do we have here as a goal? I'm looking for 10 pips. It hit 14 pips before it even got close to the daily open, so I would have been out of the trade. That's why I say there's going to be stress in anything you do, especially when you're learning. But with binary options, because it's time-based, one candle can fuck you. I mean, there's times, because this was a decent range. Like, if I would have been looking this, I would have said, here's the range. So what's that fall into? This would have been probably a reversal candle for me, depending on anything else. Even though the daily open was here, I might have waited for it to come here, which most likely I probably would have waited on the daily open, and I probably still would have lost this trade. Because I'm waiting on the close of the candle or in the last 10 seconds, and who's to say in the last 10 seconds this wasn't up? Now this wick is too big for me to trade it on binary, but either way, this is just an example of why it was aggravating. Because of the spread, this here would have most likely been a loss if I would have taken it here. I would have had to been below the daily open, and then I would have been thinking, hey, it's possibly running down, so I would have been holding, and then I finally say, fuck it, I'm in, and then I probably would have taken a loss off of doji. Because of the way binary options, see how price is above and below it right now? This line and this line, the ones that are wiggling, all that room in there, they could have dropped it to below there as a loss. So I like Forex because it gets rid of that game. And I'm sure a lot of you have had that experience with your broker where you're like, what the fuck? I got in here and it closed higher. It was just a little bit higher, but they say it closed way down here and the price isn't even close to it. It's because of the spread. Their risk management systems will look at a spread and they'll say, oh shit, we've got 100 people winning. Can we reduce that number by using the spread? And their computers will automatically look at it and say, yes, yes, yes. All the people that are entered here below because of spread, fuck it, wipe them. They're losses. And that's part of their risk management. But I'm glad you asked because that was actually a perfect example right there. Ugh. Okay, any other questions on anything? Because I'm going to take a 5-minute break. We'll turn signals on, get going. I'll probably go live again so we can talk about trades as they happen. But I know TJ, you had to get to work. Hopefully I covered everything you had questions on. I hope. Okay, the alarm text to use with a trap. So let's say I want to set a trap. Remember, this is built in. Let's see if we can find a trap to set. Okay, so I already have a line here. Let's move it up a little bit. This is an ugly one. We would not set this, but you right click, you go to horizontal properties. You type in alert underscore 2. What's that mean? I'm sorry, number sign 2. That means 2 pips away, you will get an alert. And bam, now we have 2 pips away an alert. Price is currently about 5 pips away. I use the traps constantly all day long because you can see where a setup's going to go. So this setup's going to go up or down. So set your trap so you have time to look at it before you actually get it. Because all you're going to get alert-wise is if this turns green, you'll get an alert. If this turns red, you'll get an alert. So you need your traps there. We'll add that one in. What was I going to do? We'll do inlines with traps in a little bit. Actually, I'm going to take a break. When we come back, we'll do... I know, but I want it to be a standalone video. Anyway, this was just the Forex summary. We did get a lot of questions out of it, so I am glad. I'm going to take a 5-minute break, and then we'll come back. I'll go live with signals, and we'll talk about trades that are setting up. Let me remove this, because I could give 2 shits about that one. That's not a good setup. Let's bring that out, and that stupid arrow thing somebody gave me. Whoever gave me this arrow indicator, it is a piece of shit. Sorry. I don't even remember what it was called. K something. Or B. I don't know. Piece of crap. Yeah, it is useless. Alrighty then. So 5-minute break. If there are questions, go ahead and type them up, and I will answer them when I come back. We'll go live, look for trades. And then after that, I'll probably take a little break, and I am going to do the last one. Then I'll do the last one. But thank you. I think it was TJ, the one who suggested the Forex thing. Well, he didn't suggest it, but he asked, and I realized I hadn't done one. So I'll add this into the Mega Depository as one of the videos in there. Alrighty, thanks a lot, and I'll be back in about 5-10 minutes.